some reason, there was like a dramatic pause today on
There was
on the
a
clap.
dramatic pause.
It's like the market. The market's on a dramatic pause right now, John. I mean, the market looked like it wanted to take off again like yesterday, and the next thing you know, you blink, you blink, you blink, and all of a sudden it's well, there's a little bit of red on the screens.
Yeah, well, end of the quarter is tomorrow, Pete.
Yeah.
And so people are probably squaring up some of their trades early, and you had a 150-point rally right out of the gate. Why not take a little off the table? I know that's what you did, what I did, but some people want to overstay their welcome. Sometimes they pay the price for that.
I will say this, and then we can zip it on to the macro, but I will say this. You're right. We both were smart enough to say, you know what, you get a little bit of a lift like that, maybe take a little something off. I just put a little something else on. So I know, there's certain things we're going to hit, but it is related to unusual, and it's in a tech stock. I'll tell you that. That's all I'm saying.
Bang.
Bang.
All right. Well, let's talk about the macro minute. Macro minute is all that any of this gobbledygook demands. And today's gobbledygook, Pete, is more or less that we're continuing to see metals do quite well. Silver was up 2.5% right out of the gate. Anytime you see metals or Bitcoin doing well, it's usually not because the market is as attractive as it was minutes or hours earlier. So I'm going to focus on the metals.
Yeah, I agree, John. I think that's a great call. And silver, as you and I both know, has been something that's been interesting, but it's been silver, it's been gold. There's been a lot going on. Hell, you go back not too far, you got copper and some of the others as well, steel. But I will say this, for the macro, from my perspective, it's the financials were strong early. And I don't know if it's Schwab related necessarily, but something you could just feel that it was going to roll over. And that really pulled the markets down with them, because we've had those financials kind of giving us some nice leads. And now all of a sudden we've got this pull to the downside, and they flipped from being up nearly 1% to being down in negative territory, maybe 0.5% or more.
Yep, exactly right. Well, we're going to keep our eye on that, Pete. And we're also going to tell you a little bit, folks, about fantastic futures. I see today, Pete, that sugar is up 11% in the month of March. Well, it's only in everything from the drinks, the fizzy drinks that people like, to baked products, whether it's cakes or almost anything, including bread in some cases. Rising costs for sugar means more inflation for all of us.
Yeah, absolutely. Well, mine's going to go right back to silver, John. And part of the reason I say that is there has not been a day where we haven't had at least the SLV options hitting, or some individual name in the silver complex hitting. So the derivatives world, the futures world, you take a look at what's going on with silver. It's moved from 20 to 23. I pointed out the other day. Well, now it's moving a lot closer to 24. So it's this consistent run that we're seeing out of silver. And I'll tell you what, there's a lot of liquidity out there. You can find that at the CBOE. You can find that at the CME. You can find it a lot of different places. But the futures themselves certainly have been absolutely off to the races.
Well, how about this one off to the races, folks? It's one that Pete has owned for a while. Shares of Sprinkler, but they don't put an ER on there. It's just SPRINKLR, I guess. But the symbol is CXM, and it's up big today. Software firm basically unveiling some of their AI that they're going to apply, Pete, to some of the software to aid clients with marketing, advertising, client engagement. Shoot, if you can do it with AI, you don't have to do it with people.
Right. And I'll tell you what, John, it's having an absolutely wonderful day, which is great. It's up like 15, 16%, something close to that at least. It was not too long ago. I know this market moves around, so that's what it was trading at. But I will say this, how about that revenue up 22%? And the thing that really is the kicker for me, we bring it up all the time on every stock we talk about, right? We want profitability. Show us that you're a public company that can make money, right? We've talked about that with so many different names, whether it be Uber or Lyft or whatever it might be. These guys now making money. And if you look at what they were, where they were a year ago to where they are now in terms of their revenue, the growth that we've seen there, and the earnings actually getting into positive territory. And then you take a look at their strengths, John. They've got free cash flow. That looked great. Their billings, that looked great. You look at their operating margin, why this stock is up as much as it is today. I'm not saying it's necessarily going to continue on this path, but it certainly is a big turn for them to show that they can make money.
Pete, if you look at the Gartman index, which would be, stocks moving from the lower left to the upper right, this stock is one of those, and so are the earnings. Just like Pete said, folks, a year ago, they were losing 5 cents a share. Then they were losing 3 cents a share the next quarter. The next quarter, they got into profitable territory, 2 cents a share. Now they're up, beating estimates yet again and moving to the upside again, lower left to upper right. That's a nice trajectory for this one. So one of the reasons to keep an eye on CXM.
Yep.
All right. How about Medical Properties Trust, Pete? This is symbol MPW. Up double digits earlier today, holding on to a lot of that gain. Their CEO was asked a question yesterday, and when he answered that question, the stock took off. It's still running today because one of the things they're doing is they're going to be selling some of their Australian properties in healthcare because they are a healthcare REIT.
Well, and the interesting thing, John, is this. How about this? The stock was sitting right on its ass. Let's be honest. I mean, it was at a 52-week low, and it gets this little bit of a bump for the right reason. They sold off some property. They're at least doing something, right? And they're taking in something. But here's the biggest problem that I've got with them. They've got a 15% dividend yield, and you'd say, well, God, why would you want to be there? That sounds fantastic. The dividend yield's that high because the stock has dropped that much, that low. That's the thing. You hear these guys on television all the time going, well, you know what? I like this REIT because of this. You look at that dividend and it's fantastic. And it's like, yeah, and it keeps getting bigger. And you know what? It's gone from 10% to 15%, but the stock's down 20%. I mean, you got to use the actual math that makes sense out of some of these things sometimes. I think this is a company that also, John, I'm not sure all of the tenants are going to be able to pay what they need to pay. And that's always a risk as well. That's why the stock is down as much as it was. It did get this bump today. Be leery and don't need to feel the need to own this stock because of that dividend yield. You better find a different reason. And I don't have that reason right now.
Yeah, neither do I. So it's 2 thumbs down on that one. How about Semtech, Pete, which is SMTC? This is like mixed signal semiconductor products. They came out with earnings that missed on top line and bottom line. The bottom line miss was more concerning. And basically a year ago, Pete, they were making 70 cents a share. That's good. This quarter it was 47 cents a share. So it's fallen off pretty good. That's not a thing that you'd like to see out of a company that you want to own long-term. The fact that, the earnings or the profitability is shrinking.
Right. And then when you look at the competition that's out there in the semiconductor world, right, you see some numbers that are getting better. So you'd look at this one, scratch your head and say, well, why are these numbers getting worse? To your point, John, 70 cents a year ago, 47 cents this time. They even missed the 48 cents, which was the expected number. So they even missed that by a penny. That's got to be a problem. I think that there are some issues going on that are even deeper. They are hammering this stock today. What was it down? 20, 22%, something like that, and approaching those lows. I don't think this is a falling knife that you want to catch right now. I think there are other places. If you want to be in this world, the semiconductors, they've had a bunch of great days back to back to back of late, moving to the upside. But there are a lot more in the names that we do know. And obviously, even yesterday, we were talking about, well, maybe the lowest lows have been hit in Micron. This stock is not Micron. I think that this is a problem, and I'm not ready to go in there and say, you know what, this is the bottom and I'm in, because I'm not in.
Yeah. It seems, like I said, that it's not just profitability. It is the fact that that potential is shrinking.
Yeah.
That isn't a good thing. I want to see, them weather storms and things like that, not basically have to lose profitability. They're still profitable, but
Mhm.
lose or have profitability shrink.
Yeah.
That's the problem for me with this one, Semtech. All right,
Shrinkage is never good. Shrinkage is
shrinkage.
never good.
Ask Costanza.
Ask George Costanza. There's never a good time to have shrinkage. All
Well,
right.
here's one that's shrinking pretty good, Pete.
Yeah.
Charles Schwab.
Yeah.
Now, this one fell, just so everybody knows. March 8th, the stock was $76 a share, fell all the way down to $47 a share on March 10th. Why? Because there was a run on the banks. And some people viewed Schwab as perhaps not having enough liquidity either to meet the withdrawals that might come from their customers. Well, turns out Morgan Stanley says that clients were pulling cash out of Schwab's low interest bank accounts at 2 times the rate that Morgan Stanley expected. And for that reason, they downgraded the stock. First time since they began covering the stock 7 years ago, Pete. So that's kind of scary. And that's why Schwab is down, today better than 5%.
And Schwab, let's be honest, is kind of that blue collar world, right? And so a lot of those folks are not happy about what's going on. They want to get something better than what they feel like they're getting now, and that whatever concerns they might have. Morgan Stanley, as you said, has that downgrade, John. How about $20 billion a month is what they're pulling out of this thing right now? I mean, those numbers are big, even for a Schwab. Those numbers are pretty daggone big. It's something that I think is concerning, and that's why I think that you're seeing the reaction out of the stock. I do think at some point, John, this is probably going to be a buyable sell-off. It isn't just yet, because I think there's still enough news out there, newsy news, that's going to get people out there with the palms out and the nervousness and everything else. But I think there will be a time. Now, it's right around in those 50s right now, I think, 52, 53 bucks, something close to that. If it gets back into the 40s that you were talking about, which we had during some of the more of the panic time just a couple of weeks ago, I think that would be a level where I might start looking at it a little bit. But we do have to see some of those flows slow down a little bit, and that's not something we're seeing yet.
Yeah. And I think this is one, Pete, where they do have a good franchise and an awful lot of money under, if you want to call it management, because they have a bunch of imitators. They imitate the Vanguard, they imitate the SPY, they imitate a lot of things, and they do it for really, really cheap. But when people are afraid, they go out of those and they more or less go into money markets. And if they don't really trust the balance sheet of Schwab, they pull their money out. And just like you say, $20 billion leaving that company like that happens time and time again. People are a little scared, and that's a reason to maybe be soft rather than going in and saying, well, it was 76. I should jump back in here at 53. Maybe not so fast. All right. What do you got in terms of sports there, Pete?
Well, I think it's going to be kind of fun, John. Maybe I'll turn my hat around. We're talking about baseball right now. We don't do the MLB all that often. We do talk about NFL a lot. He's going the other way. So what are you, a catcher? I'm the pitcher, or what's going on? So I think it's really important, John, to point this out. This is something we have talked about on the Huddle when I do that CCO show, WCCO 830 up in Minneapolis. It's a great show. It's a lot of fun. 2 hours. It's 10 to 12 every Sunday. That's Central Time. But these rule changes, John, are really something. And I think that the one that is the most meaningful, and the NFL needs to learn from some of this as well. We've talked about that, but the pitch clock, I think, is genius. And it finally is something they were willing to do. Now, they've been checking it out for quite some time, but now they're just putting it in there. It turns out, after we've gotten through spring training and people have gotten time to get more used to it, John, they seem to all love it. The owners love it. The coaches love it. The executives love it. It's gone from a 3-hour and 3-minute baseball game on average. They've trimmed off at least anywhere from 20 to 40 minutes off of that because of the pitch clock. It really is meaningful. I'll give you a couple of numbers just to show you, John, why they felt like they had to do it, because I think it was important. 20 years ago, they were averaging about 23 to 25 million people viewership for baseball, Major League Baseball. Pretty good. 10 years ago, it dropped to 13 million. In the last couple of years, it was 9 million, 11 million, 11 million again, right? Last year. Those numbers are pretty bad. Well, if you go back to the 1990s, by the way, we're talking 33, 35 million, but they didn't have as long a game. So now that they've done this, I think this is going to be something that really does help the viewership. I think it's going to help the whole sport in general and probably start trickling around different other parts as well, because of the fact that now people are saying, you know what, at 2 hours and 33 minutes, which is what they used to do in 1980, and they're going to be starting to do again, I think we're going to see some of those people come back to this sport. And a lot of the people that are younger people, John, that didn't like to commit 3 hours are now going to be willing to want to do this. What do you think?
Well, the ratings have been coming down, Pete, and that's the whole thing. Just like we've said about the NBA. I'll put up a tweet, folks, in a little bit that shows the viewership by year of Major League Baseball. And again, to draw from our friend Dennis Gartman, unlike a bullish pattern, this one's going from the upper left to the lower right like this. And it's stair-stepping down hard, which means, like Pete said, people are turning it off. Or not ever even turning it on. And I think, Pete, that the pitch clock, when you've got a guy on base or when you don't have a guy on base, that's going to help, in my opinion. Pitchers will not like it. It does favor the base runner, if there's a guy on base. And I think it's going to help the fans that are just tired of sitting there watching the guy do the Garapara, the Marcia or whatever, Garcia Para guy, for the Red Sox, that famously used to step out and undo both of his gloves and then put them back on between every effing pitch. I mean, that's boring. That's not what people want. They want to see play. And if you want to see play, that's why football is so interesting, because they got to snap the ball every 35 seconds or they get a penalty. So I think baseball needs to deal with this problem. And hopefully some of these changes will do that.
Yeah, I think you're right, John. And it might, it affects both. It's not just the pitcher; it's the batter as well. So the adjustments that go on are gonna be dramatically reduced because there's a heck of a lot of those going on as well. All right, so next we're gonna hit the Masters, and the Masters is not till April 6th. But if you take a look, it's pretty interesting, John, because I didn't know this, but the Masters and all of these big majors, right? They all have the opportunity to do how they want to do it, and they have their own sets of rules. So with the Masters, the rules are that you have a certain qualification to be able to be at the Masters, one of which is, have you won a Masters? And if you have, you're in. Well, with everything that's been going on with the LIV, you just wonder, well, what's going to happen? Well, the Masters said, to hell with it. If you've won, you're in. As a matter of fact, 18 LIV golfers are part of the 87-man tournament that will be starting next week. So it's pretty interesting to see, John. And, there could be bragging rights maybe, on the winner, right? We're from, LIV. We won. We took first, second, third, or vice versa, whatever it might be. But there's a lot of big names that made that jump. A lot of guys that have stayed with the PGA that are not very happy about this whole thing. And so it'll be interesting to see. I don't think you're going to see guys, going after each other or being mean to one another. But, it's going to be interesting, because is this going to happen the same way with the U.S. Open, the British Open, some of the other majors out there? It'll be interesting to see how this whole thing unfolds.
Yeah, well, the Saudis, or, whichever of the countries, the kingdom that was behind LIV, they picked up some pretty damn good players. And like you said, Pete, two of them have won multiple Masters. Bubba Watson, he won 2 in 12 and 14. And Phil Mickelson won in 2004, 2006, 2010. And he's been competitive, obviously, in a bunch of them.
Right.
but Sergio Garcia, Dustin Johnson, I'm just reading off my list here, Pete.
Yeah.
Patrick Reed, Charles Schwartzel. These are all guys that have won the Masters. So they're all invited, regardless of what, the PGA wants to say. The Masters, they're the ones that make that invite list. And then they invited a bunch of the other players from, LIV that had not won, but are damn good players. So people just want to watch the most competitive golf that they can get. The players want to get paid the most that they can get. And, an awful lot of people do business in the kingdom over in the Middle East. So if you want to really rip on Phil Mickelson or, Garcia or any of these guys, Bubba Watson, well, then take a look at some of the companies that do business over there too. And they're looking to make money from dealing with people in the kingdom. So why shouldn't these golfers do the same? Everybody wants to make this a morals thing, Pete. But, when it comes to somebody paying you 10 million, 50 million, $100 million, how many of us would turn that down? Some of us would, obviously, but an awful lot of us would say, so for me just signing up for this, I'm signing up for $100 million in.
Yeah, there's a lot. There is a lot. And there still is the disputes out there. I know Rory McIlroy is one of the guys who's very much against it. And there are other guys, and I think they can still, cohabitate. I think they can be together for 4 or 5 days and be all right. So we'll see how it goes. Dustin Johnson, John, was the #1 ranked golfer in the world not too long ago. But because he's not qualified through different tournaments, he's dropped all the way down to number 67 or something like that. Just gives you a little bit of an idea. It has nothing to do with his own play, but he's not playing through the usual system. So it kind of brings him further and further down. It's just another one of the factors that goes into it. By the way, this is my Legendary Golf. That's my guys up in Minnesota. So shout out to them. Maybe they'll have somebody up there at the Masters next week with some of their stuff. Who knows? We'll see how it goes.
Yeah, well, I love the Legendary stuff.
Yeah.
And meanwhile, I've got Podcast One, Rob Ellen. Anyway, folks, thanks for joining us as always for the Rebel's Edge. We break down what's going on in the markets, give you a little look at our thinking for the futures, as well as that macro minute. Those of you who have been writing to us saying what happened to unusual activity. Well, for the time being, unusual activity is not here on the Rebel's Edge, but it is still at Market Rebellion. So you can go over to marketrebellion.com/get started and check it out. If you're a subscriber, you already know, you already get it. We want to thank Jared, who handled the boards today and all the graphics. And Pete and I will be back Monday next week for more of the Rebel's Edge, 1 p.m. Eastern Time. Bang.